Today, I want to discuss with you the simple steps that you can take to become rich in 2021 by investing only $100 a week into the crypto market. Now, this is a number that almost anyone watching should be able to invest in, which if you can do consistently, I believe will help you to build a strong portfolio with good potential for returns. Obviously, you can invest 50 or 200 or 500 or 1,000, whatever your number happens to be. But I think that $100 is a good goal for the average investor to be looking to invest. And I'm also going to give you some different portfolio ideas of how to invest that money. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild land of crypto. Now, before I actually get into the specific steps, we have some housekeeping to take care of. First off, let's talk about expectation versus reality. The expectation for many people is that Bitcoin and cryptocurrency investing is some kind of get-rich-quick scheme, and that you're going to become like an instant overnight millionaire with your $100 investment a week. The reality is that cryptocurrency investing is still investing. And yes, you can make very good returns in the crypto market. Often you can make those returns much quicker than by investing in traditional markets. You are, however, unlikely to become a millionaire anytime soon with a $100 a week investment. But if you expand your time horizon out a little bit, or you can afford to invest a little more than $100 a week, then you're much more likely to be able to make some just really incredible gains, particularly if we're talking about next year. Now, 2021, it's likely, in my opinion, to be just a massive year for the cryptocurrency market. The real gains, they do come from holding, really strong assets like Bitcoin or Ethereum for the long term. And let's just have a quick look here at the 5-year performance of Bitcoin and Ethereum. So if you had bought one Bitcoin 5 years ago, you would have made gains around 5,000%, which is, that's pretty good. 5,000%, not bad at all. Now, if you had bought one Ethereum 5 years ago, then you would have made gains of around 8,000%. Nice. Very, very nice. So that's cool. It just gives you this idea of how big of returns you can get for some of these strong crypto assets. Now, the next thing to keep in mind is your personal risk profile, because there's good crypto assets and there's bad crypto assets. It's a highly volatile asset class. Investing in the top coins like Bitcoin and Ethereum, that's going to reduce a lot of the risk for you. But it will also mean that your potential for exponential gains is also going to be a lot lower. Yes, Bitcoin and Ethereum are going to do super, super well. But don't go expecting like a 100x move from either of these coins. The market caps would be in the trillions for that to happen. Now, if you want the really big gains, you're going to need to chase the smaller cap coins. So the ones that are $50 million, a $10 million market cap. This also means that your $100 a week that you're working your butt off for can vanish in an instant into thin air, just like that, if you invest in coins that are too risky. So please do be aware of the risks of investing in this volatile market. By the way, even though I see crypto as a massive growth opportunity, I also invest in like the stock market, right? So that can be a great part of your investing strategy as well. But this video is only talking about cryptocurrency investing, so we're not talking about stocks here. And the third thing I want to mention before we dive into this topic is to just gently, very, very gently caress, pet, maybe just a little tap on the like button for the YouTube algorithm. Okay, seriously, hit the button, guys. It's awesome. Now, the third thing is that you actually need to have $100 a week to invest. Genius. I know, right, Lark? But I chose $100 as the topic for this video because more than likely anyone watching can actually find a way to squeeze, $100 a week to invest. There's, two ways that you're going to be able to get $100 a week to invest. Either earning more or spending less. One of those two things, maybe a combination of the two. So you can, pull a few extra hours a week at work. Maybe you're going to start, flipping some stuff on eBay. Maybe you pack your lunch instead of eating out every day. Maybe you have a coffee at work instead of going down to Starbucks. You can even try things like shopping around for cheaper providers of insurance or a cheaper phone provider or a cheaper power provider, kind of stuff like that, right? All these things can have a really big impact on your ability to invest. So tighten it up, make sure you're not just throwing money away you don't need to be throwing away. Now that we've said all that, let's talk about how to invest $100 a week into the crypto markets. First off, you're going to need a decent exchange account with low fees. Don't use Coinbase. I know it's user friendly. I know it's a place where a lot of beginners end up, but you can actually pay up to $3.99 for a $100 weekly crypto buy. That's crazy stuff, man. Depending on where you live, you're going to have different options available to you. For example, if you're an EU citizen or you're an Australian, then you can use Binance for free fiat deposits. And then the fees to buy any individual cryptocurrency are only 0.1%. So that's a savings of 3.89% over using Coinbase. Big difference, guys. By the way, if you sign up for Binance using the link down in the description, so if you do need an account, use that link and you're going to get a 10% discount on your fees on Binance. By the way, all the coins that I'm going to mention today in this video can be bought on Binance, so you got that going for it too. Now, also make sure that you are automating this process. You are actually investing that $100 a week. So set up an auto debit for that once a week deposit that goes through to your cryptocurrency exchange so you can actually be doing that weekly crypto buy. Now, if you don't know how to use a cryptocurrency exchange like Binance, then check out the tutorial that I made. It's going to be at the end of this video. So full tutorial on how to buy crypto using Binance, all that stuff. So it's all information there for you. Now, once you have your money on your exchange account, the question then becomes, what the heck are you going to buy anyway? I'm going to share 3 portfolio examples with you: a low risk portfolio, a medium risk portfolio, and a high risk portfolio. Now, I just want to be clear. I'm not sharing these portfolios saying these are the exact coins you need to run out and buy. I'm giving you this as an idea of kind of what a low, medium, or high risk portfolio would look like and how you kind of plan around that. So let's start off by talking about a low risk, low hassle portfolio, but still has the potential for some pretty decent rewards. This is going to look something like this: 60% Bitcoin, 30% Ethereum, and 10% USDC, a dollar-backed stablecoin. Now we have a 2-to-1 ratio of the top 2 cryptocurrency here. Now these cryptocurrencies, they have obviously the greatest adoption, the deepest liquidity, and the best chance of making it long-term in this rather nascent market. Now these 2 coins absolutely lead the market, but they also, as a result, have the biggest market caps, so don't go expecting a 100x gain from investing in either of these coins. Now the 10% of the US dollar coin, it does 2 things. One, it allows you to have money at the ready to buy dips that come around in the market. Dips come all the time. If you don't have any chips, you can't buy the dips. So you have that money sitting there ready to use. And the second is you can actually use those dollars to earn good interest while waiting to buy dips. You can buy even more dip. In fact, you may even want to consider dumping your entire portfolio in this low risk example into a service like BlockFi, where you can earn 6% interest a year on your Bitcoin, 5.25% a year on your Ethereum, and then 8.6% on your USDC coin. So allows you to earn even more with your investments. Now, if you sign up using the link down below for BlockFi, you just want to learn some more information about that, you can get a $250 bonus by using that link. Now let's talk about a medium risk portfolio. Now this is still going to have that rock of Bitcoin, so 25% here. Then we can include 2 major smart contract platforms, Ethereum and Polkadot will be the ones we're going to choose for this portfolio at 12.5% each. Ethereum is the kind of the more sure bet, whereas Polkadot is the hot new upcoming platform, so it's kind of a bet on that future growth. So even here we're starting to seek out that bigger growth, right? Polkadot is much more likely to have better gains than Ethereum in 2021, so you're betting on that higher growth potential. The next 5 coins on the list are all decentralized applications for these 2 platforms. We have one Polkadot application, which is Ocean Protocol. That is a data marketplace, very, very buzzy coin, this one. Then we have 4 different Ethereum applications. Aave, which is a lending and borrowing platform in the decentralized finance niche. Then we have Uniswap, which is the premier decentralized exchange. So we're going to be buying 10% of our portfolio into their Uni token. Then we have Reserve, which is one of the most popular stablecoin projects out there. It's got some amazing backers as well, so it's definitely one worth looking into. And then there's Chainlink, which is the most popular and most used data oracle in the market. Now we're going to take 10% on each of these 5 coins. And these 5 coins, they're all respected. They're all well-established players. They all, are very powerful and dominant within their own respective areas of the market. In my opinion, those coins will all provide nice returns for investors over the coming market cycle, certainly much more than you're going to get with just, Bitcoin and Ethereum. And then the third portfolio idea is the high risk, high reward portfolio. Even with such a portfolio though, I still think it's a good idea to have exposure to Bitcoin. So we've got 20% of Bitcoin in here and exposure to Ethereum at 10%. Now this is going to help just kind of reduce that danger within this portfolio while also allowing for a lot of growth with the other 70% of the coins. Then we're actually going to bring in 2 medium risk altcoins, so 10% into Uniswap's Uni token and 10% into the Aave token. Again, we're reducing risk here. And then for the rest of the portfolio, we're going to be looking at higher risk coins. We have some low and medium stuff in there already to kind of reduce the risk in our high risk portfolio. Then we're going to go 10% into each of the following 5 coins. The first is Injective Protocol. Now, this is a decentralized exchange protocol. The second is Dia. Dia is an oracle provider, much like Chainlink, but with a much lower market cap. The third is called Axie Infinity. This is a Pokemon-like crypto game, which is super interesting, super cool. The fourth is Orion Protocol. Now, this is a trading terminal for the crypto market. And the fifth is Matic, which is the premier layer 2 scaling solution for Ethereum. I do want to note, though, that even these coins, I'm labeling them in the high risk category. They're definitely not as super high risk as this. People are investing in some pretty crazy stuff in the crypto market right now. I see people FOMOing into just insane coins with anonymous teams, and they get rug pulled. They lose all their money. It's bad stuff, right? All the coins I mentioned, they have professional, transparent teams. They're either currently having a working product or they're soon going to have a working product. So it's all worth consideration there. These coins, though, do have lower market caps compared to the low and the medium risk portfolios, meaning that they have higher potential for gains. So, gains are what we're after, right? As a final note here, before I finish the video, you need to have a clear plan for taking profits with your portfolio, because if your portfolio moons and you get super rich on paper, but you don't click the sell button, then get ready to watch your big gains all disappear just as quickly as they came. Don't be that guy. Don't let that happen to you. I've made a few videos on the topic of when to sell your cryptocurrency, how to sell your cryptocurrency. You have to check those videos out if you haven't seen them yet. Anyway, guys, this is just a short overview of how you can invest $100 a week into the cryptocurrency market, giving you some ideas here on how to build out different risk profiles for your portfolio. But I want to know from you, what do you think? What would be your advice for a new investor on how they can invest $100 a week into crypto? Let me know down below in the comment section. Thank you so much for watching today's video. Long live the blockchain, and peace out till next time.